Hey everybody, it's Mike from Orderflows, and welcome to today's video. Today's video I'm going to talk about the MES futures versus the ES futures, and because one of the questions I get is, should I trade MES or should I trade ES? And I sort of want to break it down on some order flow activity and let you decide which one you think is better. So before I begin, be sure to subscribe to the channel if you haven't already. We're trying to post a new video up every day, and like and comment on the video. All right, so one of the questions I got recently was concerning MES versus ES. Which one is better? Obviously, there's a big difference in contract size. The micro minis, the MES, trades at a much smaller contract size relative to the ES. They both trade very good volume, and honestly, the way I treat them both is I treat them as separate contracts in terms of trading. If I'm trading the MES, I'm only looking at the MES. If I'm trading the ES, I'm only following what's happening in the ES. Of course, will look at to see what's going on, but there's not going to be much discrepancy. There are people that trade the MES versus the ES and arbitrage those opportunities when it's out of line. But to be honest, it's very rarely out of line more than a tick, and if it gets more than a tick, it's brought back into line really quick. But from an order flow standpoint, right, when you're looking at the volumes in the order flow, obviously there's going to be big discrepancies. But again, based on the volume that's going through on the MES, you can trade it as its own creature by itself based off what you're seeing in that order flow. And some people say, well, Mike, shouldn't I just follow the big one since that's the main contract that the market is following? The MES is sort of following it. Well, yeah, you could. Obviously you don't want to be getting into a position sort of opposite to what's happening in the big ones. But again, what you're seeing in the MES is also taking place in the ES. Okay, so this is, again, today is the 2nd of January, so, right, there's no trading today. The interesting thing about, a little trading tidbit is, January 1st is really the only day that the markets are closed. Now, again, I can't remember if India is opened or closed on New Year's Day, but even during Christmas, the Japanese markets are still open on Christmas Day. I remember I've been in the office trading on the TOCOM, right, Tokyo Commodity Exchange, on Christmas Day, but New Year's is really the one holiday around the world that every market is closed. So we'll reopen tomorrow, the 3rd, and again we'll see what's going to happen. Right, we had that big late rally on Friday, so this is Friday's order flow in both on this side here on the left side is the MES, on the right side here is ES. And just really quick, right, just looking at this low that was made just after 832. Now this is a 8-range chart because I had gotten another question, someone asking me what's a good range-based chart to use for ES or MES, and I like to use an 8-range, but you could also use a 10-range. I think a 4-range or 5-range is too fast for the equity markets, right, the ES or MES, and I think 8 to 10 is sort of my sweet spot in terms of analyzing the order flow. All right, so this was that low at 832.16, and you can just see how the volumes are different. Obviously, where the point of control is coming in, is a tick difference. I mean, the low is still 38 and a quarter on both markets. Point of control on the MES is coming in at 38 and a half. On the ES, it's coming in a tick higher at 38 3/4. One of the noticeable differences is you have this thin volume in here as the market starts shooting back up, right, on the MES, right, whereas on the ES you just sort of got your normal volume. Okay, they both have positive delta. Obviously the volume on the ES is slightly more. This one got a little bit different here if you're just looking at the way the volumes are on these bars. At that low on the ES, it's 2,500 contracts. On the MES, it's 1,297, but the bar before it on the ES, it's only got 852, whereas the bar just before it on the MES has 1,800. So while the bar on the low has got 1,000 less on the MES, it's got 1,000 more on the bar before it. Again, semantics, but again, there's enough volume going through on the MES just to trade it on its own. Okay, now where it got a little bit interesting is when the market started moving away from that low. Now, these are both 8 range charts. So on the MES, right, 833.16, we had a nice stacked buying imbalance. 833.14, you don't have a stacked buying imbalance on the ES, although you do have 2 imbalances. And then in the next bar, you got an imbalance coming in, where it should have been in on the previous bar. But you have a stacked imbalance. So if you're trading stacked imbalances, you had a nice trade here. Okay, you got another stacked imbalance a little bit later, 833.35, 833.35. There's no stacked imbalance on the ES. Okay, then you get up to that high at around 54, the bar right before it on the ES. You got a nice, big stacked buying imbalance, pretty much the whole bar is. Whereas on the MES, it's kind of split between the 2 bars. Okay, so which one's better? Well, again, it's not a matter of, well, I should be trading this market or I should be trading that market. If you're trading the MES, you focus on the MES. It's got enough volume to trade, right, on its own. I mean, compare that to, say, euro currency, right? People trade euro currency futures by itself. Okay, and and just compare that, the volumes just going back, the volumes you're seeing in here, 342, 238, if you hit a bar on an 8 range chart in the euro currency of 1,000 contracts, that's a lot. On the MES, is doing 1,000, even more than 1,000, no problem. Okay, so it's enough to trade on its own. You don't have to necessarily follow the big ones and take the trade in the micros if you don't have enough money in your account to fund a big one, right? You could just trade the MES on its own. You're just going to get different signals, but what you're looking for in the order flow is still going to be the same, right? Now, I do understand people's arguments that, well, the moves are going to be truer in the ES. Well, yeah, the moves are going to be the same, right? It's not like MES is going to rally 10 ticks while the ES is selling off. It's just not, right? Because the algos are going to bring it back in line really quick. Because again, while it may be off by a tick on the bid and the offer, right? There's going to be times where, say, the bid is, a quarter bid at a half in the MES, whereas the big ones might be even bid at a half or, even bid at a quarter. But those discrepancies aren't going to last very long, right? They're going to be brought in line. And, a lot of traders, they don't really haven't been exposed to many other markets other than, the markets in the US, but Japan and Singapore, right? Japan, the Nikkei was 10 yen, whereas in Singapore it was, a 5 yen spread. So while the Nikkei might be 18,820 bid at 30 in Osaka, on Singapore it'd be a quarter bid or 25 bid at 30, right? So there was those arbitrage opportunities in between, especially, that's one of the excuses that Nick Leeson used in Bearings is is taking advantage of these arbitrage opportunities. It would be 25 bid at 30 in Singapore, but the trader in Japan knows he's going to be selling the 20s in Japan and the 10s, so they just go in and whack everything at 25, 20, 15 in Singapore. But I said with the MES now, with the electronic tradings and these algos, they really bring all that together and keep a tight spread, right? So it's not really out of whack very often. But sort of what I want to get into a little bit today is talking about imbalances, okay? And I like talking about imbalances because, imbalances is something that, a lot of traders now are really starting to pay attention to. And it's good because, anytime you have a market that's out of balance, that's where good opportunities arise. And, let's just sort of go back here. This is my E-mini chart here. Let's go back to this low, the low of the day here at 21, because if you remember on Friday, right, we had a huge, a big rally off this low from, 21, closing all the way up above, close to 70. We closed around 68, but off this low here, where was it here? It's 12 something, 1225. Okay, just pull up the MES at that time as well. So this is an 8-range chart. Okay, because what you're going to see is some similar activity here. Again, same, but different. Okay, so, you know, at the low, right, 34 contracts traded in the MES and the bigs 32. Okay, then it started rallying, right? And on this move up, you don't see any stacked imbalances here, right? Early on, right? And you know, trend trading is one of the easiest ways to take advantage of the market, right? If you get in on a trend early, and one of the signs for getting in on a trend is imbalances in the market, but you have to have a move to sort of to reverse to catch that trend, right? And you know, at the low of the day, and again, like I always say, you know, you're at the low of the day, you want to be looking for a reason to be getting long, if it's there, right? Don't go fishing for reasons. It should be something just poking you in the eye, saying, hey, you know, look at this. And imbalances is something that I'm always looking at in the order flow when you're at the low. I'm looking for buying imbalances, okay, if I'm looking for the market to move off this low. And you know, we got on the bar at the low, one buying imbalance. Well, first we'll start with the MES, okay? So yeah, you know, going into the lows, there's some selling imbalance, stack selling imbalance here, but on the way back up, right, there's no imbalances till you get all the way up here to 35.5. Okay, well, you just rallied from 21.5 all the way up to 35.5, so it's already a 14-point move. You know, is there something in here that could have told you, hey, you know what, there's strong aggressive buying? And there is. If you look at the imbalances, and what I've done over the years is I've realized that imbalances in a bar, whether, you know, they don't have to be stacked, right? Everyone likes looking at stacked imbalances, okay, and saying, well, yeah, because that's very visual. You got 1, 2, 3 stacked on top neatly of each other. But what I've learned, and you know, what I've taught over the years, and now I'm starting to see it put in other software, thank goodness, finally, is what I call multiple imbalances, right? Bars that have, you know, 3 or more buying imbalances, you know, green candles for a bullish signal, or, you know, 3 or more selling imbalances and red candles for a bearish signal. And right here, right, as this market is coming up off the low, I've got 1, 2, 3, 4, 5 here, okay? And we even color the top of the bar green, but again, you don't have to, right? But knowing that you have that aggressive buying coming in, just something visual to sort of whack you in the side of the head, said, hey, don't miss this opportunity. You know, aggressive buyers are stepping in, right? Because remember, we just had a very strong sell-off. You reached a low level, and now, you know, buyers are stepping up, basically saying, hey, you know what, get long, right? Everyone is coming in and getting long, okay? But if your software isn't highlighting that to you, you're going to easily miss that. And that's why, you know, using tools that's available to you, you know, software can do a lot of things. So something as simple as telling you, hey, you know what, you got multiple imbalances here. That's why we even put the little trigger there. It's going to give you that edge, because everyone's waiting for that stacked buying imbalance to come in. It doesn't come in until, you know, 35.5, 36. Whereas here it's telling you, you know, a good 5 points lower, the aggressive buying is already coming in, because look at that. This is already a good portion of that move up. Okay, so that's on the MES, right? On the ES, same thing, but it's coming in the bar off the low, right? Here it came in, you know, the low 1, 2, 3, 4, 5 bars off the low. Again, this is an 8-range chart. Now it's coming in on the bar immediately after the low, right there, right? Then we just highlight it really quick. Again, you know, I try to do these videos and keep them simple with the basic order flow chart, and I really feel like I'm missing out on teaching you guys a lot, because, you know, order flow, it's so robust. There's really a lot of information that you can use, right? And you know, people that aren't using order flow, I think, are the ones that are going to be left behind in 2023, because, you know, I've been working with you know, more advanced programmers on stuff that, you know, they're putting this into more and more sophisticated trading models. So on the regular, the ES, right, the bar afterwards, right, you're not even waiting to get to your stacked imbalances. The MES had it up here at 35, but look at this, it's giving you a chance to get in off the low at 25, 20, at 26, anywhere in this bar or this bar, and that's a quick 10 points up. Okay, then obviously we started coming back down. Then we got that big monster rally, and again, with that big rally that happened late in the day, right? What's sort of the signs? You got stacked imbalance here, but your multiple buying imbalances are coming in here. Okay, people say, well, what about these selling imbalances here? Okay, maybe you thought the move up was over in here, but then it reverses right here with a nice bullish signal to catch the rest of the move back up. So again, MES versus ES, trade them as their own unique market. You don't have to sit there and analyze the ES to trade the MES. You could trade the MES as its own. I do. And because a lot of what you're looking for in the ES, you're going to also look for in the MES anyway. And maybe about 75% of the time, a lot of the things that you're seeing in the ES is going to appear anyway in the MES. So when you're looking at imbalances, again, look for those bars that have the multiple buying imbalances off of the low, right? And that was the whole point of this exercise today, is talking about the bars that have multiple buying imbalances off of the low, okay? Right? Because again, you're looking at structure. You're at a low. Is the market telling you, buy me? Right? If we're at the high of the day, you'd be looking for reasons to sell it. And one of the clearest, obvious reasons to sell off of a high is aggressive selling, and in the form of imbalances in the market. Just as if you're buying off a low, one of the sure signs is aggressive buying off of buying imbalances. All right, everyone. So I hope you enjoyed that video. Again, be sure to like and subscribe the channel. Keep those comments coming. I do read them. My wife thinks I have to reply to every single one. I try to get to them, but enjoy, and I hope you guys have a great 2023 in trading. Bye bye.